What difference do you think Mark Carney's comments are going to make to the behaviour of the UK market over the short term?
I think that the UK market's entirely bifurcated at the moment, Jeff. You've got the exporters that are rising because the currency's going down, and you've got the domestic plays, the FTSE 250, for example, which is 6-7% down over the last week, dropping away. And I think what Mr. Carney was saying is, look, I'm worried about the housing market, or rather I want to get ahead of the curve on the housing market. I want to cut rates. I want to reduce potential mortgage payments. That's what we're going to do because so many mortgages here are floating. And so to that extent, perhaps some of the slide away in the house builders and slide away in some of the real estate proxies might come to an end because of what he says. And of course the second point is that if he goes to zero and then after that go to QE, that's just another factor pushing the pound down.
The immediate effect, as you point out, has been for the market to rotate aggressively into companies that it perceives have strong foreign earnings, or foreign currency earnings at this point. The fundamentals of many of these businesses haven't changed overnight. Indeed. The translation effect has, though. To what extent does that trade begin to wash out if we get a firmer pound?
Well, you need to look at it from the point of view. If I was coming from a dollar portfolio base, first of all, those stocks were 10% cheaper or 8% cheaper over the week, simply in my portfolio base, and then they've had a bump to their earnings and to their dividend paying capabilities after all out of this. Question, how far up does it go? I think that in the end that comes down to earnings, it comes down to economies, and listening to the spirited debate you had over the last half hour, it is clear that earnings growth numbers after you adjust for translation are probably skewed to the risk is skewed to the downside, not to the upside now.
Yeah, you'd love to see. You own the market. That's not a surprise. You guys have got a big lump of everything.
All of it.
You've got a big lump of pretty much everything that's worth having out there, and a few that perhaps aren't.
We're not going to talk about individual stocks as usual.
But I know that. I've got a few lined up. A bit of Tesco, a bit of Sainsbury's. No, but the point is, I mean, you've seen this.
Don't go away, viewers.
Two very easy questions. Did you put money to work on Friday money on the long side? Did you add to holdings? And are you now lightning, given what you just said?
Well, look, I'm not going to say what we've done in short-term trading. Let me talk a little bit about ETF flows, because that's where you see the money in motion. ETF flows all this week have been positive into European equities. They've been positive into large cap v small cap in the UK. I think that there's been a bit of averaging in coming, and it's been coming from around the world. And then if we look at emerging market, which you were talking about earlier with Jeff Dennis, what we can see there again in the flows is that Asian listed ETFs have had good flow in, American listed less so, European reasonable amounts. So the buying I think is coming from people looking at portfolio based, looking at currency based opportunity.
And yet, UBS came out yesterday and said the FTSE is going to 5,500 as well. Do you expect us to have? I know you said that the risks are skewed. I think you just said risks to the downside now after the rally. So do you think that kind of, which would be a very violent move? We're talking about 1,000 points off the FTSE, and of course, I guess every other market would come off in the same similar kind of vein as well. Do you expect that kind of move?
I think that's quite dramatic, and I think that's quite dramatic because I think over the next year. One should really be reasonably bet that although sterling is down a ways, the trend is going to be to the downside further. And if that trend is to the downside, then going back to Jeff's earlier question, the translation point will get stronger.
So the difference.
But it's a judgment on. It's a judgment. I mean, let's be clear. This is a small economy off the northwest coast of Europe. There will be multiplier effects in Europe.
UK?
Yeah,
I thought it was the 5th biggest economy in the world.
It's a small archipelago off the northwest coast of Europe.
There's the 5th biggest economy in the world?
Hang on, wait a moment. Europe's much larger. There will be a knock-on effect into Europe, and there will be a small effect into the United States. Now, at a time when nominal growth is very low anyway, this impacts at the margin.